Hey, money changes everything, crew. I'm happy to be back with you. I've been out and about today, actually getting someone started on starting their own financial services business. In any event, today, as you might have been able to tell by the title and the thumbnail, we're going to talk about Mark Cuban. We're going to talk a little bit about him because he invested in a cryptocurrency, and that cryptocurrency went from $60 to $0. Boom, gone, bust. Now, there are a lot of cryptocurrencies out there. This one didn't work out. Mark Cuban is obviously a very financially savvy individual because he has been involved in various enterprises that have worked out very well. But what can we learn from what just happened to him in the Titan coin? Well, for one thing, we know that billionaires are not always right. Okay, it proves that, and he'd probably be the first to tell you that. But it also proves why you shouldn't just blindly follow a big name. Now, why are we talking about Mark Cuban losing this money, $60 to $0? Why are we talking about that? Well, because more and more we're seeing retirees or employees or small business owners have the opportunity to invest in cryptocurrency within their qualified retirement accounts, their 401ks, their IRAs. Is that a good idea? 60 to 0. Usually we hear about 0 to 60. We're talking about a Tesla, maybe doing it in 2 seconds. But this coin went from 60 to 0. Would you be able to stomach that? Those wild rides. Crypto's very volatile. Again, Bitcoin has lost more than half its value since April, all right, in a 3-month span. Would you be able to stomach that? Just keep that answer in the back of your mind as we get into this. MCE crew, I'm very happy to be back with you today. Let's get started. Okay, let's get started here. We're reading from the Wall Street Journal. Again, I don't make any money from this, but I do think you should get a subscription. Go ahead and watch this video up here, How to Read the Wall Street Journal. It's our most popular video. Saving for retirement. Now you can bet on Bitcoin. That's a good way to put it, bet. Before we go into this, please do your due diligence. I'm going to say that several times throughout this because if you decide that you want to go and put cryptocurrency into your qualified retirement account, then it's a pretty ballsy move, in my opinion. Might come out great. You might end up like Mark Cuban in the Titan coin. But let's get to the facts. Every day, investors are inviting the volatile world of cryptocurrencies into their IRA nest eggs as they search for higher returns. Now watch this video. We're going to talk to you about higher returns at the end and how you can get them a little bit safer than this, in my opinion. Cryptocurrencies, among the world's most volatile assets, are searching for mainstream acceptance in the investment world. Their next target, your retirement portfolio. Now we're going to see why these crypto companies are looking at your retirement portfolio in just a second here. It's not 100% altruistic. Let me just put it that way. Follow the money. Financial services companies are rolling out new products and services that allow more everyday investors to add Bitcoin and other virtual currencies to their nest eggs as a way of reaching for a higher return. Some are marked under the names such as Crypto IRA or Bitcoin IRA. Interest in digital assets is, quote, exploding, unquote, said Tyrone, good name, Ross, chief executive of OnRamp Invest, LLC, which in May began selling software that more than 100 financial advisors use to monitor client investment in cryptocurrency. Quote, folks with Bitcoin in their retirement accounts. That's what Mr. Tyrone Ross says. Okay, now here's a number I want you to remember. It is a big new target. Investors currently have $22.5 trillion tied up in IRAs and 401ks. So now you see what's going on, okay? These companies want to access more of that by allowing Bitcoin and other cryptocurrencies, and you see Bitcoin because it's the most popular, allowing them to, be included in these qualified retirement accounts. Now let's briefly talk again about how these retirement accounts work. You put in money before taxes. The United States government allows you to set up these accounts as tax-deferred accounts, meaning that you don't pay taxes on it when you put it in. You pay taxes on it when you take it out. Okay, so it has grown and been more susceptible now to higher taxation in the future. I always ask this question. We are trillions upon trillions of dollars in debt as a country. Do you believe taxes will be lower in the future or higher? If you believe that they will be higher, then you also are admitting that your qualified accounts that are going to be taxed in the future are going to be hit with higher taxation. So we got that $22.5 trillion figure that's out there. 14% of the advisors said that they use or recommend cryptocurrency. 14%. That's not an overwhelming amount, compared with fewer than 1% who said so in 2019 and 2020. So we're at 14%. It's not a lot. It was at 1%. Now, of course, 14 is more than 1. Seems to be growing at a prodigious clip. How long will that last if crypto continues to display the volatility that it has displayed? As I said earlier, Bitcoin has lost over half of its value since April. Will it come back? I don't know. This month, For Us All Inc., a 401k provider that specializes in small companies, announced that it will allow workers in plans it administers to invest up to 5% of their 401k contributions into Bitcoin, Ether, Litecoin, and others. Now, 5% may not sound like a lot, but as we go further, we're going to learn that it actually may be in comparison to another data point. One investor who has already chosen digital currencies for his retirement account is Vukasin Vignejev, 28 years old, a market researcher who lives in Maine. So he's a market researcher. He's plugged in. He's probably got some credentials, educational credentials, and experience here. Okay, so let's just take everything into account. Mr. Vignejev says, I'm not opposed to traditional assets, such as stocks, but digital assets solve a lot of the problems the world faces today, such as bringing financial services to people without access. Okay, I don't know about that argument here in the United States. I'm not sure who would have access to Bitcoin and not have access to PayPal, Cash App, some of the other ways to access money. So maybe he's looking at it from a more global perspective, but here in the U.S., I would have to disagree. Mr. Vignejev said his individual retirement account represents a small portion of his overall holdings, which have, quote, a pretty high percentage, unquote, in cryptocurrencies. So he's an investor in cryptocurrencies, but he's made the decision to have a minority of it, a small amount of it, as he says, in his actual IRA. Adding digital currencies to retirement accounts entails plenty of risk for the average investor, including high fees and high volatility. We're always talking about that. Bitcoin has lost about half of its value since hitting a record high in April, as China has intensified its crackdown on unregulated virtual currencies. Now, we did a video just here recently on how China is pretty much attacking cryptocurrency, and their attacks have affected the market by putting downward pressure on the value of these coins. Now, there's a video that we'll link to up here. You can go watch that. So that's what's going on here. Do you really think you have the stomach for this? Something that's losing 50% of its value in 3 months. That's a wild ride. Now, let's close this out. One digital investing company, Betterment, is, quote, actively exploring, unquote, offering cryptocurrency in IRAs and taxable accounts in, quote, a way that enables clients to do it in a responsible, advisable manner, said spokesman Joe Zimmer. Betterment's vice president of behavioral finance and investing, Dan Egan, said anything over 1% of a portfolio is, quote, an aggressive allocation. Now, remember earlier that they said that 5% was the way to go with this? But this guy, the behavioral expert, he's saying that 1% is going to be adequate. Let's just skip back up for a moment. Force All, that's the 401k provider, announced it will allow workers and plans it administers to invest up to 5%. So they're opening the door to a lot more risk than Dan Egan, the behavioral scientist that works for Betterment, than he's advising that they do. And check this out. Given that cryptocurrency represents just 1/2 of 1% of the value of global stocks and bonds. So if you've got a speculative asset like cryptocurrencies, and it doesn't even represent a percentage of the value of global stocks and bonds, why would you, in a retirement account, why would you invest 5% in it? Now, you can make the argument that if you win in certain retirement accounts, if you're able to manage this and pick some real winners, you can come out gangbusters. We talked about how Peter Thiel invested money in his Roth IRA and how he turned $2,000 into $5 billion. So there is that. But remember, the Roth IRA is a different animal than the traditional IRA or the 401k, in that with that Roth, you're paying the taxes up front and allowing it to grow tax-free. So you can, at the age of 59 and a half, go ahead and start to withdraw that money and not face taxation. So watch that video also to learn more about that technique. But we're talking about, we haven't read the word Roth IRA anywhere in here. We're talking about the traditional qualified accounts of the traditional IRA and the 401k. My thoughts on this: very risky. I think that you really got to know what you're doing to play around in that crypto space. And as we saw with Mark Cuban, this guy's got access to all kinds of information, and he had a huge misstep on that Titan coin. So be very, very careful before you consider putting a cryptocurrency in your traditional IRA or Roth IRA, or traditional IRA or 401k. Do tons of due diligence. And you're also going to have to watch the performance of these coins as well. It's not like, a big blue chip stock that's going to just have steady performance. You're going to need to watch the performance of your cryptocurrencies daily if you're going to entrust even a portion of your retirement savings to such a speculative asset. All right? So that's all for now. Guys, I'll talk to you soon.